But Shivangi Sardar also joining us on the show. Shivangi, hi, good to be speaking with you. Well, we're all discussing the kind of big turnaround and dramatic turnaround we have seen in the FI positioning overnight. But what's your view on the market right now? Stay away, or there is some sense to perhaps start building up a trade today because perhaps we are poised for a short covering?
Very good morning. Thank you for having me. So we have seen that, from the last four sessions, the index has witnessed good amount of profit booking decline. And of course, FIIs have, wiped out their longs in the yesterday session itself. But, this is ahead of the event. So, one possibility is that nobody wants to take, solid positions ahead of such volatile scenario. But overall, if we look at the daily structure, Nifty is still holding to its 50 daily exponential moving average. And from the lower zones, even yesterday, we saw a quick pullback move in the last half an hour itself. So overall, support based buying is strong, but absence of follow up buying at the higher zones is not letting the index sustain at higher zones. So we are expecting somewhat volatile swings in within a range for the index, for the coming week itself. And looking at the broader range, 22 to 22 is the major support over here, with a hurdle placed at 22,750 levels.
Shivangi, okay, that's the take coming in on the index alone. Other than the Nifty Bank, let's also address the pressure points in the market yesterday. It was metals, largely led by Tata Steel, post its earnings miss. That was definitely a big drag. Titan was down about 3.5%. Technology was definitely taking a back seat. There was pharmaceutical as well, which did see a bit of a bout of profit taking. Kunal, other than metals, which was of course the obvious one, where is it that you see more profit taking or bout of pressure building up today?
So I think I'm not sure whether today would probably see one more round of such kind of sharp unwinding in terms of positioning, because I think most part of the positioning should be should have happened yesterday because of the coincidence with the expiry. But I believe that in terms of pressure, one of the other sector which has suddenly gone to a bit of a reversal is the real estate pack, and I think the likes of DLF, for example, has retraced by a margin of 10 to 15%, and this stock had remained absolutely resilient, over the last many periods of volatility in the last 1 to 2 years. So I think there is a definite change of stance over there in terms of short-term positioning. So I believe that maybe the realty pack as such, could see some bit of more unwinding. We've seen, chemical stocks, sugar space. These sectors have underperformed. They could continue to remain into a bit of a drag from here on. Autos, on the other hand, I think is still one of the stronger pocket, because whether you look at the likes of Ashok Leyland, whether you look at the likes of Maruti, M&M, Hero MotoCorp, Bajaj Auto, I think these stocks have shown fabulous charts for themselves as a pack. So I think that's one sector which I would believe that should be a lot more resilient. And in case if the sector gets into, say, a broad 3-5% correction, I think that should be a very good buying opportunity for a whole host of these names.
Right, okay. Oil refiners, they're also going to be in focus on Singapore GRMs resuming their downward decline, fall to the lowest level in about a year. That's how steep the fall, in fact, has been. Samit is here with more details on what really could be the implications. Samit?
Well, Singapore gross refining margin, which is the Asian benchmark for refining margins for the oil refiners, have come down, in fact, on an intraday basis to $0.9 per barrel. Now, this is the lowest level that we have seen since the last year. However, there was an intraday bounce back, and currently the levels are at around $2.1 per barrel. But for the month of May, if you see, Singapore gross refining margins have been continuously coming down from its highest level of around $4.4 that we had seen in the start of the month. GRMs have now come down to just $2. That is a drop of more than around 50% that we have seen just in this month. So what could be the potential reason behind this? Well, it could be because of the rising inventories of refined products in the market, which has led to this drop in the Singapore gross refining margins that we have been seeing. And how will it impact the Indian oil refiners? Well, for Chennai Petro, from MRPL, if you see, every $1 per barrel drop in the Singapore gross refining margin impacts their EBITDA by nearly 1,000 odd crore rupees. For Chennai Petro, it lowers their EPS by around 30% For Indian Oil Corporation, BPCL and HPCL, which are the three largest oil refiners and marketers in India, their earnings come down by nearly 14 to 16%. And for Reliance Industries, if you see on a consolidated basis, their earnings take a hit of nearly 4 to 5 odd percent with every $1 per drop in the gross refining margin. So keep an eye out for all the oil refiners, including Reliance Industries in trade.
Okay, thanks Amit for that. But time now to welcome on board Sandip Sabharwal as well. He joins us on the show. Sandip, just wanted to begin by discussing Zomato with you because my colleague Asta was just talking about how JioMart is likely to enter into the e-commerce business and that could be a bit of a big disruptor. Is it perhaps good time to take some chips off the table on Zomato?
I think what we saw after the last quarter results was although the delivered numbers seemed to be good, but then they were looking at doing a lot of offshore expansion and investing a lot in the business. So at that time, I thought it was a time to get cautious. So the stock just fallen, I think, from 190 to 180 after that. And any increase in competition in a segment where, as it is, the existing players are making losses will be a negative development. So I would think that people who have made most people who have invested in Zomato have made good money. So it could be a good time to trim exposures.
Sandeep, hi, morning. What is it that you're making of this FI positioning right now? The longs, it seems, have dropped to 13% at the start of the new series. What is that indicating? I mean, does that only leave more room on the table for a massive, pacey move by the market, short covering, if the verdict were to swing the market's way?
I saw most of the developments in the stock markets are more global in nature. So what we have seen is a coordinated sell-off in most global equity markets over the last few days. And that's something which we have seen in India also. Now in India, there's an event also looming. So to that extent, everyone is a bit more cautious. So whoever wants to go long is taking a cautious stance. There are some other people who are hedging their positions, which could also get reflected as shorts. So there's a possibility that there could be some short covering or increase in longs if the verdict goes the way of a strong government and the same dispensation continuing next week. So I think that's the situation we are in now. If globally markets continue to sell off a bit more, it's unlikely that we will defy that and suddenly start rallying significantly.
Yeah, fair enough. Looks unlikely when the global pressure is acute. We can't seem to be insulated to that level. But shifting focus to some of the other stocks which is going to be in focus today, you of course saw that profit booking yesterday on Cummins. But today from numbers, we have Bharat Dynamics that continue to report good set. And this is a thing that we have seen across all defense companies, Sandeep, that the numbers have finally started trickling in. Gives you more confidence about this PSU pack in defense, or still you're worried about the kind of valuations and the interest that we have seen from the markets in this one?
Yeah, so PSU defense companies from being almost not owned are now in all retail investor portfolios. They are heavily promoted and also very fancied. The good thing is, like you rightly said, it's been backed by performance. The profiting and top line increases of many of these companies, as well as the guidance what some of these companies are giving, are encouraging. So on one side, we have extended valuations. On other side, we have a strong visibility of growth. So that creates a sort of strange situation today where the downsides could be limited, but because of valuation, upside is also limited. So I think there's no reason for people who have been holding for a long time to actually sell off their holdings. But whoever wants to buy new, I think they should wait for some sell-off in PSUs, some bad days, etc., to accumulate.
Right, bunch of earnings actually. Of course, you'll have the Motown sales data as well trickle in, and Hero MotoCorp is launching their Splendor XTEC 2.0, which is the starting range is about I think about 82,000 odd per unit. And then, of course, the new one from the M&M stable, that's the XUV 300. That, of course, has been quite the dhamaka one in any case. So that's going to be the other segment which is going to be in focus. But Kunal, still going strong on M&M and Tata Motors?
Yeah, a bit reduced on Tata Motors, but I think M&M is a strong bet at current levels. Maruti is also, I think, is very interesting because yes, the stock in the last 3-4 months, I think start of this year had managed to break past about the 10,000 mark slowly and gradually. I think it inched up towards the 13,000 levels, and now between the 12 to 13K mark, it still looks very attractive. So I think from a short-term trading play, if it gets closer to this 12,000 mark, I would believe that the risk reward could be very attractive for initiating fresh longs on Maruti, or maybe adding to some positions over here. M&M, of course, has been more of a formidable stock, has done reasonably well. Hero MotoCorp from the two-wheeler pack has also looked very attractive. Ashok Leyland is a fresh breakout from the auto pack. I think the stock breaking past about that 185 to 200 barrier was a huge breakout for Ashok Leyland. This could probably indicate a start of a multi-month, multi-quarter uptrend for the stock also.
Okay, interestingly, M&M has got an upgrade today. Let's pull up some of those graphics as well, because I think Bank of America was the one which had upgraded that stock. Yes, so it's an upgrade to a buy from neutral. They have hiked the target price to 3,050 on M&M versus 2,480 earlier. They are saying the core and more is something which is working for the company. So the group is worth more than just some of parts as well, and they see a lot of catalysts for the stock going forward, so that stock in focus. But let me toss it to Somit now. He's joining us to talk to us about what kind of inflows we should expect today, because MSCI quarterly rejig is expected to happen today and take effect towards the last hour of the trading session. Somit, which are the counters which are likely to see the biggest amount of inflows and outflows?
Well, if you see, MSCI had few days back announced this changes to their indices, that is the main index and the small cap index as well. And today the flows are expected regarding these changes, and these flows are likely to come in the last half an hour of trade. So which are the stocks that would largely remain in focus on the back of flows? Firstly, it's PB Fintech and Sundaram Finance, which are expected to see an inflow of anywhere between 200 to 232 million US dollars. Apart from that, it's Phoenix Mills, NHPC, Industars, which would see an inflow of anywhere between 160 to 190 million US dollars. Then there is Torrent Power, Bosch, Thermax, which could see an inflow of anywhere between 120 to 150 million US dollars. And then there is Canara Bank, JSW Energy, Jindal Stainless, which could also see inflow of anywhere between 160 to 187 million dollars. On the deletion side, if you see, it's Berger Paints, Paytm and IGL, which could see an outflow of anywhere between 57 to 94 million US dollars. And because of higher weightage, it's AU Small Finance Bank and Macrotech, which could see an inflow of close to 36 to 77 million US dollars. On the weightage downside, if you see, it's PI Industries, Dabur, ICICI Lombard, Bajaj Industries and Reliance Industries. Reliance Industries could see an outflow of nearly 168 million US dollars on the back of lower weightage on the MSCI index. When it comes to the small cap index, there are stocks like Sundaram Finance Holding, Greenlam Industries, RR Cable, Alok Industries, Dynamatic Tech, which could see an inflow of anywhere between 3 to 8 million US dollars. While on the deletion side, it's Nexus, REIT, Tatwa Chintan, Borosil, Indico Remedies and Rajratan Global Wires, which could see an outflow of anywhere between 1 to 10 million US dollars. So keep an eye out for all of these stocks in trade, because there will be MSCI flows in the last half an hour of trade.
All right, Sandip Sabharwal joins us. Sandeep, like they say in a cricket match, now it's down to wires. I think it's actually now down to wires. Today is the last day, and markets on Monday will react to the to exit polls. I'm surprised with the fractured market positioning. DI long, retail long, and FI short almost at all-time high.
So I think, like we were discussing earlier, in my view, the FI short positioning has two, three parts. One, it could be a hedge on their existing holdings because of the event. Secondly, the global market construct has been weak. So to that extent, it's very difficult for India to continue to rally when the global markets are correcting. So that could be one part of it. And the third is that there might be some foreign investors who might be just taking a view on valuation, that Indian valuations are very high. And to that extent, it makes sense to short here and go long somewhere else. So there are a lot of hedge funds who play that strategy. But tough to say what comprises the major part of it. So I think it's good that if people are cautious, people are bearish, so that usually restricts the downside risk. So I think there is an event. The event is something where the probability of an adverse event is low, but then it still exists, and to that extent, we have to wait it out.
Trade, Sandeep, in let's say if FIs are short, they will come back. If they come back, they will buy what they own, and what they own is pretty much banks, IT, autos, and some NBFCs. Is there more like a trade there that okay, FIs are short, they will like the verdict, they will come back, they'll be forced to cover the shorts. What will go up? What they've sold?
So then again, it depends on the reasons why people are shorted, like I said. So if it's a pure hedge on valuations, etc., so some people might hold on and expect that post the event euphoria, etc., the markets will again fall. So I think it's very tough to predict these things. We have not seen foreign investors come back aggressively uh, uh, despite corrective moves, etc. And so I think there's been a reallocation into other emerging markets out of India, except the flows which just come up because of FTSE MSCI rebalancing, where India's weightage has been going up, and that gets in passive funds. If we actually remove those passive fund inflows over the last 1.5 years, then actual FI outflows will actually look much worse.
Okay, so that's the take as far as market positioning is concerned right now. But just shifting focus to a few more stocks which will be in focus today. Of course, apart from the auto companies that will be waiting by for those, kind of numbers to come tomorrow. Mrs. Bector's is also going to be in focus because of the good earnings that we have seen from the company. And ditto can be said for Muthoot Finance as well. Shivangi, do you have a view on these two companies, Mrs. Bector's from the cash one and Muthoot as well?
Looking at these stocks, of course, there has been a lot of momentum here, but clearly my focus is on some of the auto names. I'm shifting complete focus on that, but auto stocks are looking quite positive, holding quite resiliently over here. One of the strongest counters here is Motherson Sumi, which is recently given a consolidation breakout and a very strong follow-up buying on the weekly basis. So good rollovers can be seen over here as well, as we've seen that longs have been added in this entire series. So this is definitely looking quite positive and a buy at these levels.
Okay. I want to look at Tata Steel. Hello, nothing wrong with the numbers. More upgrades than downgrades. The commentary was decent and the stock fell. ये क्या हो गया कुणाल? ये तो नंबर अच्छे थे. Steel metal is an uptrend, but Tata Steel reversed.
Yeah, I mean, I didn't know why the stock fell post.
But it fell. Now what happens? Tell us.
Yeah, so I think it's a positioning of the markets, Nikunj, because yesterday the markets were just into a complete unwinding of positions, whether it's good results or bad results. I think if I'm not wrong, Cummins also came out with results, and the stock had seen such a kind of a sharp reaction on the downside. So I would probably believe that it's got to do with the market positioning. So what happens is typically these are the kind of stocks where there is positive data points, and when the market stabilizes, it get to a rally mode. These are the few set of stocks which actually come back to their previous swing highs first, then most of the other peers, and I think that's where one should try and take positioning. So I think it depends on if someone is willing to take a risk at current levels or waiting for the event to get out, and then look out for positioning on the metal counters. I think that's where I think Tata Steel should be amongst the top favorite candidates.
Okay. Nothing in the small and the mid cap space which could be called as very exciting and explosive. But Bharti has hit a market cap of 100 billion, let me put this, a 100. Vodafone Idea from the QIP, which was what, 10.5 rupees, 11 rupees? Anisha, I think 10.5 rupees Vodafone FPO, right?
Yeah.
10.5, right?
The price band was around 10 to 11, I think.
10 to 11. 10 to 11 has actually become 14 in less than 3 months. So here is like a 30% gain in like a liquid large stock. Sandeep, no one saw this kind of a move coming in Vodafone Idea.
I think people who were subscribed to the QIP and it was actually oversubscribed actually saw that. So I think this is a phenomenon. So I think it's intriguing. It's a good situation where I think post Bharti Airtel conference call and the commentary they gave and whatever cues are coming from Geo now. So I think the competitive intensity in terms of pricing pressure seems to be receding. And typically in a industry, when the fundamentals are turning around and pricing starts to improve, the weakest player tends to benefit the most because it was doing the worst, and to that extent it benefits. Now, whether it will actually end up creating any shareholder returns, i.e., whether Vodafone will ever go into profits or not, is still a question mark, and I would be surprised if they actually do that. So I think to that extent, there could be potentially more legs up, but whether they'll sustain or not is a question.
So that's a view coming in on telecom. I'll just go to Winnie, but in the meantime, I wanted to flag out the kind of move that we have seen overnight on Salesforce stock, because that stock was down a solid 16%, and that's not auguring well for companies like Infosys, Persistent, Backhome, etc. as well. So just keep an eye out on IT stocks today. Might be a bit under pressure because of the global setup that we have seen. But now let's take it across to Winnie to get a sense as to what's been the latest commentary from the managements who've been joining in the City conference. Winnie, take it away.
Good morning, and yes, talking about the key highlights, we have three companies where we're getting some highlights from. One is Delivery, ICICI Bank and Paytm. Let me start with Delivery, where we've been seeing that the company has managed not to see some amount of growth, but now the tepid demand trend, they said that is something that will still continue overall in the e-commerce business, and this has been a trend that they've seen post the festive season. Other than that, appliances and D2C business for the company is growing higher than the general consumption, and in the medium term, the growth potential for India e-commerce, they highlighted, is at around 15 to 20%. At that pace is what one could expect the e-commerce side to grow. For them as the company, quick commerce doesn't impact them a lot more, and it's a very small impact currently for Delivery, but that is something that they're keeping an eye out on, and they don't intend to enter into any dark store businesses as of now. Moving on to ICICI Bank, we have ICICI Bank who highlighted that they expect the RBI's draft project finance guidelines to be beneficial for them in the long term. Furthermore, they are saying that they expect steady NIMs of 4% and better operating efficiencies to support their return on assets. Improvement in transaction banking activities is something that will be supporting their fee income growth, and they don't foresee any lower deposit growth to constrain the loan growth. Lastly, we do have highlights from Paytm, where they're saying that new merchant acquisitions for offline side has commenced in Q1 that is Q1 FY25, and a new consumer acquisition will commence in consultation with the regulators after they've seen active consumers on the UPI handles that have been transitioned to the partner banks. Lastly, they are aiming to continue to invest for growth in merchant acquisitions and will be focusing on lowering their corporate overhead. So key highlights from the City conferences for these three companies.
Point taken. So that's the key commentary coming in from the City conference. Watching out for those. Thanks so much, Vinny, for joining us. But in the meantime, let's take stock of what's happening. Okay, so the pre-open rates haven't really trickled in for now, but yesterday wasn't a day that bulls would want to remember. And if you go by the positioning right now, it's going to be a soft start, not a weak one that we saw yesterday. But the biggest thing to watch out for is how we really pan out during the trading session, because yesterday as well, it was the second half that led to that bit of turmoil. Pharma continues to be in focus. There are names from the likes of, markets which were weak yesterday. Glenmark has come with a decent commentary in terms of their way forward. But Sandeep, what's your take within pharma right now? Any top bets within large caps or small cap pharma names?
So small cap pharma in general, I avoid because the earnings tend to be very volatile. But looking through the results, what I've seen is that there's been a decent margin expansion and good earnings from most of the smaller pharma companies. So I think it depends on what, if people are tracking them, they can obviously find some. On the large cap side, most of the companies seem to be fairly valued now. The earnings don't create much upside for stocks like Reddy, Cipla, or Sun Pharma. We own Sun Pharma, but again, I think in the near term, the upsides look limited.
Okay. It's actually been a good year. It's been a good year for pharma, whether it is Cipla, whether it is DVs or comeback, what we've seen, let's say, even in Sun in last couple of quarters, Aurobindo has hit out of the park, really hit out of the park. Shivangi, we are talking about a lot of capex, we talk a lot about banks, but pharma does not really enjoy the kind of attention it deserves, given that the price action in pharma has been quite decent.
So, looking at the entire pharma space, there are some counters which are quite sustainable and resilient. But then, most of the counters are quite highly volatile and high beta stocks. So I think that is why people, do not talk about pharma so often, because it is a very highly volatile counter sector as a whole. But among which I am, looking at Glenmark, which has given a price volume breakout, and this is one stock which has been consistently on the rise from the last 16 months, with supports gradually shifting higher. So this is one stock which is quite strong, and one can expect a higher levels of 1200 zones over here. 1130 would be a support to watch out.
Okay. 12% higher for Nifty Pharma. Sandeep, we'll be working on that list, but of what you should buy on a 5% decline, on a 10% decline. But if you have to, let's say one stock which you would buy irrespective of the election verdict on 4th, and if that stock falls 10%, you would say, I will not look at the ticker of political numbers, I would look at the ticker of stock market numbers, and I will buy that stock if it falls by 10%.
So I think stocks unlinked to the electoral verdict have to be consumer stocks only. So I think the stock one would buy if they fall 10% from here would be something like Dabur or Hindustan Unilever, because as it is, they seem to be starting on an upcycle. And if we get better prices, then it makes sense to buy.
Sandeep, what about the policy of Modi stocks? That's where the real action is. That's where the outperformance is. Whether it is L&T or NTPC, whether it is to some extent ABB or Siemens or Cummins, policy or the Modi-related stocks have done exceptionally well. Do you think somewhere it's now prudent to take some chips off the table? Doesn't matter what the election verdict is, just book 10-15% profits there.
So it depends stock to stock. So I think valuations of some of the stocks have run up to very crazy level and not unbacked by fundamental. I think their earnings have also surprised continuously for the last few quarters, something like Siemens, ABB, etc. So I think where valuations are very high, then I think it makes sense to take some chips off the table. L&T, I would still think that the valuations are not so excessive.
For L&T, there's still valuation comfort, but just shifting focus to some of the big buzzers of yesterday. Emami was one stock which was up around 17% yesterday. Post the commentary, we did speak with the management as well. But Kunal, what's your view on the charts of Emami? And the other one I want to take your view on is Paytm. Not sure whether it's going to open with another gap up today, but any view on that stock?
So Emami is interesting. The stock, it's confirmed a big breakout on the weekly, monthly chart. So I think it was going through a triangular pattern consolidation. We've been maintaining this view that many of the FMCG names are going through a revival for themselves. Britannia was one of the stronger names, which of course is in the F&O segment, and many of the other stocks were just about chugging behind for themselves. But I believe Emami was a strong case of a breakout. The stock breaking past about the 600 levels from the non-F&O stock. And 650 I think is the all-time high. 650, 660 approximately is the all-time high levels for the stock. I think it should now be in line to break past about those levels pretty soon. So maybe over the next 2 to 3 weeks, we could look at that kind of a target range for Emami. Paytm, on the other hand, I would still believe that it's an avoid, because the way the stock has positioned from 400 or rather from 550, 600 levels, 400 is the first important resistance for the stock. So far in the last 3-4 months of this major price correction, it's still forming a pattern of lower highs and lower lows, and a confirmation of a breakout would happen once the stock breaks past about the 400, 420 plus mark.
Okay, that's the view as far as Paytm and Emami and Britannia are concerned. But just talking about the markets right now, because the pre-open rate suggests we are likely to open around 22,600. A lot of individual movers that are expected. Take a look at Bharat Dynamics. It was a good set of numbers. So that's expected to open with a gap up of 6%. Praj Industries is expected to open 6% higher. Policy Bazaar, Lodha, Oberoi Realty, these are some of the names. Of course, they'll settle down further, but those were the names that were coming up on my radar as likely to open with a bit of a green tick. On the losing side, watch out for IGL, Mastec, as well as Suven Pharma. These names might just open with a bit of a red tick at the start of the day. But let's take the mid-cap ideas from our technical experts. Shivangi, what's the cracker mid-cap idea? Okay, I think there is a bit of an audio issue. We'll try and, sort that out. But before that, Kunal, let me take it to you. Your mid-cap bets?
So I'll go with an auto anch name. Sonacom Star is something which is starting to look very attractive. The stock in the last, I think, 2 months has recovered from 550, 570 to now 630 plus mark. Looks very attractive in terms of the positioning, bullish flag formation. The stock confirming a breakout above 50-day moving average. So Sonacom Star is something which I would recommend for a potential target of 688, and stop loss could be kept at 615.
Okay, Sonacom Star is the bet coming in from Kunal. Shivangi, what about you?
Dixon is on my radar, and we've seen that this stock has been consistently respecting its key 50 daily exponential moving average, and a good amount of rollovers have been seen in the IT counters this sector, this series. So this stock should benefit from that, and we've seen that there has been a gradual uh, shift in the base. So this stock is looking quite positive for the next targets of around 96.80 with a stop of 91.20.
Okay.